So, in trading, how exactly should we take an entry? How will we know that yes, we should enter this trade, that we have all the confirmations? What are those confirmations? What are the things we should look at to decide whether we should enter the trade? That's exactly what we're going to tell you in this video. We'll give you some points, just note them down simply, and while analyzing the market, keep checking them off, okay? Check mark one point, then the next. And when all the points are ticked off, then we can enter that trade, okay? We'll explain all those confirmations step by step in this video, in simple words and briefly. We won't waste your time, okay? So make sure to watch the video from start to end because this video is going to be very important for you. And if you like the video, then make sure to like it and subscribe to the channel, okay? With that, without wasting any more time, let's move into the video. Okay guys, listen. We should never enter a trade based on just one confirmation. There should be multiple confirmations. If we get one confirmation, then another, then a third, then yes, this trade can become a valuable one. Then we can take that trade. This is what we should know, right? So for that, there should be at least multiple confirmations, at least 3 to 4. We'll discuss them in this video, okay? Point number 1. What should we pay attention to? Look, point number 1 is the trend. The trend is our friend. Remember this, never go against the trend. Always try. If the market is sideways, that's a different case. But if the market is trending in one particular direction, try to find trades within that trend, okay? We'll also explain how to find them. So our first confirmation should be the trend. Whenever we start trading for the day, we need to go to a slightly higher time frame and observe what the overall market trend is, okay? If we see the overall market is in a bullish trend, what will we do? We'll look for bullish trades. We'll look for trades on the buy side, okay? And if the trade we've found is also on the buy side and aligns with the trend, then that's our first confirmation that yes, we can take this trade. This is our confirmation number 1, okay? Now let's move on to point number 2, right? Point number 2 is Fibonacci. Look, Fibonacci will never deceive us. Fibonacci is a tool. Whenever we apply it, it won't deceive us. How should we use it? Look, we use Fibonacci as a confirmation. If the market is in an uptrend and we want to find an upside trade, what should we do? We can apply Fibonacci on any already completed major buy-side move and see whether the market has pulled back to the Fibonacci levels. If by chance our trade entry is coming around the 38% or 50% levels, which are good Fibonacci levels, then this becomes our second and very important confirmation that yes, we can take this trade. Okay? What was our first confirmation? We saw that the trend is on the buy side and our trade is also on the buy side. Correct? The second confirmation, a retracement from the previous move, came toward the sell side and it aligned with our Fibonacci level. Correct? So this is our second confirmation. Now look, it's not necessary that we get a Fibonacci confirmation every time. Sometimes we may not get it. We may get some other confirmation instead, which we'll discuss further. But whenever we get the opportunity to use Fibonacci, we should apply it and check, okay? Because Fibonacci is the best and the only tool on TradingView that we use, okay? So this was our confirmation number 2. Keep it in mind, note it down properly, okay? Let's now move to the next confirmation or next point. What's important for a good trade? The third point, stop loss. What do we mean by stop loss? Wherever we are getting the entry in a particular trade, first we should check, is the stop loss logical there? Now, what is a logical stop loss? Suppose we are getting an entry here. A logical stop loss should be below that swing, with a buffer, okay? Suppose the market has already moved a bit higher. Now what's happening? Now our stop loss is becoming too big, right? What do most people think then? They say, okay, I can't give such a big stop loss, so let me place it a bit higher, or let me stick it close to the entry. These kinds of stop losses are set which just reduced the stop loss amount, but it is no longer a logical stop loss. Okay? That stop loss holds no value because it's not logical. We should find such entries where a logical stop loss can be placed below the swing with a decent buffer, because sometimes the market comes to shake out weak hands and can just touch our SL in reverse, right? That's why keeping a buffer is important. We've learned this from personal experience, how important a buffer is. If you've seen our previous videos, there are many times our SL was just touched and the market moved up, right? To avoid that, we now always use a buffer. So this is it, the third point. Our stop loss should be logical, and that's where we should take our entry. Okay? Now, let's move to our fourth point, or fourth confirmation, that will help us take a trade. Correct? Fourth confirmation is, identify whether there's any liquidity or traps forming there. Why is this important? Look, we already said we should trade with the trend, right? Suppose the market is in an uptrend, and we want to find an upside trade. Where will we look for it? Exactly. We'll look for it in a selling trap. Suppose the market is in an uptrend, and then it forms some price action like this, where it breaks a proper swing, okay? Now, what is this breakdown? It's the entry of sellers, because many sellers enter at breakdowns, correct? But the market is still in an uptrend, and we are looking for a buy-side trade, correct? So here, when a breakdown happens, a lot of liquidity gathers here, right? Liquidity zones are any support or resistance zones. When they break, a lot of liquidity accumulates there because a lot of entries happen, correct? Our first confirmation is correct. We want to take a buy-side trade, and we've found one. Second confirmation, Fibonacci may not apply here obviously, so we won't use it. Third confirmation, the market just moved up from here, our entry is forming here, SL is being placed here, correct? If our stop loss is fair, then this is another confirmation, correct? Third confirmation, there was a breakdown here, so obviously a lot of liquidity is here. That becomes another confirmation. What does this mean? This move from here will come fast. We'll get our target quickly. Simple, right? So here, we can easily take our entry. We will get our target. For example, recently this happened. The market was overall in an uptrend, as you can see, correct? To find a buy-side entry, what happened here? A fast move came. After a breakdown, correct? When a support zone broke, then a strong upside move came, correct? So this could have been a great entry, just giving an example here, okay? Now we've got all these confirmations. Our next step is take the trade. Go to our broker, place the entry, okay? We took the trade, placed a logical stop loss. Now, what should we do? Next step, set a logical target. Now, what is a logical target? It shouldn't be like, we'll make $1,000 or we'll make $2,000. We shouldn't think that way. We should look at where the next resistance is, where the market might reverse. In this case, the next resistance is this zone we've already marked, right? So what will we do? We'll set our target up to there and quietly exit when it gets hit, okay? What should we do? Once SL is set, once target is set, place both in the system and sit back and relax, okay? Stop watching the chart. Either the SL will hit or the target will hit, right? What else could happen? Now, when the market reaches the target, we can do two things. Either we exit the full quantity or we exit 50% and hold the rest. And for the remaining 50%, we trail to 1-to-1, let's say. Now, what will happen? We'll get profit on 50%, and if the rest hits the trailing stop loss, so be it. Will we take a loss in that case? No, right? This is how we should trade, okay? We hope you now understand what things we should pay attention to when taking an entry. You might say, do we have to check so many things, so many confirmations? Yes, absolutely. Until we reach that level of experience where we can open a chart and instantly understand everything, we must follow these check marks and follow them strictly, okay? Only take entries after these confirmations. And we hope this will make you completely profitable, okay? Thank you so much for watching this video. If you liked it, like the video right now and subscribe to the channel. Thank you so much for watching. See you in the next video. Till then, bye.